Hi there, I'm Dean Heskin. Thanks for tuning in to our podcast, The Secret War on Cash, where we take a hard look at some of the hard facts or changing factors in our financial markets and economy. And I have my co-host Chris Agelastos with me here today to kind of go over a few things. And there's a lot of stuff to cover here, actually, Chris. We're at no shortage or loss of material these days, and it's a lot of different topics too, and a lot of topics that are, I would say, unfortunately, in most cases, a little less than favorable. And I think
Yeah.
it's kind of reflective of, the country, the economy as a whole. Not that we want that, not that we hope that, but there just seems to be, an abundance of uncertainty right now. And
Yep.
what we're going to talk here on our first article we're looking at about Warren Buffett, whom we've covered some of his comments and remarks he's made a few times before in our podcast. And in fact, I would say, Chris, in the last couple of years, by and large, the biggest news that's been coming out about Buffett has always been, you know, him dumping stocks, if you will. Other than probably isn't this is technically or kind of when he's retiring at the end of this year, or kind of passing the torch along.
Yeah.
Um, what that means exactly, I've heard, a few different
Mhm.
accounts or tellings of that, but nonetheless, I mean, him dumping stock has become a very common thing, and in this particular instance, he dumped 6 billion, and that's just in the third quarter of 2025.
Right.
So, it's a lot of money, it's a lot of selling off. And to be clear, in the SEC filings, he sold 12.5 billion total, and he bought up 6.4 billion. So that's where the net is a $6 billion sell off.
Yep.
And I think what's really, and it's actually to the point now of us covering this in the podcast, I read this article earlier, and forgot right in here, it actually talks about how this is the 12th straight quarter, so 3 years of net stock sales for the conglomerate, as they say. And they now have, like, so you hear, okay, to me, $12 billion is a lot of money. To me, $6 billion is a lot of money. But you look at their cash reserves as a whole right now. So, like, what's an adequate amount of cash to have? Well, we just sold off, 12.5 billion worth of securities. They are sitting on $381 billion worth of cash. That's a ton of cash.
Yeah.
And the bottom line is that, you know their earnings are doing well. Their operating earnings rose 34% to $13.5 billion. So that's even in the midst of all this selling off. And the bottom line is, and say it right here in the article, Chris, this cash buildup they look at as a defensive stance. And the bottom line is, yes, of course, it's a defensive stance, because he does think that there is tremendous overvaluation in the market right now. And so the question is, like, with Warren Buffett doing this with Berkshire's holdings, is this something that the average investor out there should be, number one, aware of, number two, taking note of, and number three, maybe following suit?
Yeah, I think there's a few things we can take from this. Obviously, I think I can safely say none of us, maybe even nobody watching this, has the type of money that Mr. Buffett has to be able to make these moves. But you can still do similar things, and you're right. What he's been doing is essentially saying there aren't really a lot of great deals out there. There are a few values, and he buys those. But there's a lot more bad deals than there are good deals, and that's why he's pulling this cash off the table. A lot of people feel like he's waiting for a market crash or a dip to come, where he can then swoop in with that cash and pick up some values. I do think it's interesting that his earnings, they grew about 34%, which is great, and it was mainly driven by, they say here, insurance and utilities businesses. And I don't know about you, but I can safely say in the last several years, one thing that's been consistently going up is all of my utilities and all of my different types of insurances. That
Right.
stuff is getting more expensive. for the average household and family. And I think some of that is obviously due to inflation. Everything costs a bit more. But I think these companies are also kind of putting the screws to some of their clients, and maybe raising rates more than they have to because they can get away with it. So I do think that's interesting, and I think those could be good sectors to kind of follow him into if you want to, have some of your money in the market like this. And what's interesting too, though, is that he actually is pulling money out of some tech companies like Apple, T-Mobile, Charter Communications. Not to say that he doesn't still have decent positions there, but he's pulling back. So I think the average investor, even if you only had five or $10,000 or $15,000 in a retirement plan that you wanted to put into stocks, you could follow some of his advice. I would also say, make sure you have some of your money in cash and physical metal, physical real estate, tangible items, so that you have some protection for when this inevitable market crash comes that Warren has been predicting for a little while now.
Yeah, well, and simply put, that you have proper diversification, where you have your money spread out into different things. That's the prudent and practical approach to things. And if you haven't done that already, and especially, in the 33 plus years I've been in this business, it's never ceased to amaze me how many very seasoned investors I've talked to who have had little to no experience with actually not
Hmm.
just physical metal, but metal of any kind, meaning they're all different: mining shares, gold contracts, gold futures, ETFs. Physical metal is really what's key right now because it's a non-encumbered asset. There's no debt tied to it. Its value is just based on what it is, which is why banks and countries, institutions around the world have not only been buying it, but very aggressively buying it. And if people tuned in here, if you want to learn more about that, you can contact our office by calling us 1-800-289-2646, or you can text us at that same number, 1-800-289-2646. We'd be happy to answer questions you might have, or you may just want to have some information or materials sent to you at no obligation and no cost. You can actually even just go to our website and request them as well, free of charge, at www.swissamerica, all one word.com. Both that phone number and the web address you will find in this show description. Now, to your point, Chris, taking a look here at the second article, uh, this is from Seeking Alpha, and like you're talking about with Warren Buffett expecting market correction, they're agreeing with what you're saying and what likely Buffett
Hmm.
is saying. The market is due for a correction here. And they cite the fact, the S&P 500 has gone up 44% just in the last 6 months. And they just like with gold or any investment out there, investment or class of investments, there's always predictions being made, and they were predicting a 6,800 to 7,000 S&P 500 by year's end, and they've already surpassed that. But it's the bottom line is that the no market does go up forever. And especially when you start looking at, and we've discussed this in other programs before, like in the tech sector, if you were to just focus on that alone, when the tech sector tends to have market corrections and give money back, it takes a while for that to come back. And we've used some specific
Yep.
examples. And, that's where I think, this all falls in stride or in step with what Buffett is doing and what he sees coming. And I think it is something that people should take a hard look at, especially, hate to pick on them, but tough not to, when you look at NVIDIA. I mean, you are
Yeah.
talking about a company, the market valuation of that stock alone is greater than the entire Bitcoin market. So crypto
Right.
market. So, I mean,
Yeah.
you're talking about things that have just gotten, as this author talks about, and I would agree, just really completely out of whack.
Yep. Yeah. I mean, he uses the word here, overextended, and that's probably a mild word for it. A near-term correction is likely, he says. So not we could see, but it's likely, and he still has a long-term positive outlook, which I think is important to mention because look, somebody in their 20s and 30s. they can weather a storm a little bit better than people in their 40s, 50s, and 60s as you're approaching retirement age. And that's where especially diversification is key. Although I think it can benefit someone at any age. But a lot of the people that we talk to on a daily basis are in retirement or coming up on retirement, and they've worked hard all their lives and have built up whatever nest egg they're able to based on their income level, and they want to protect it. And oftentimes they end up imbalanced and having way too much of their money in some of these tech stocks, for example, because in the good years when they grow, your pile then disproportionately grows in those stocks. And maybe you started out balanced years ago, and now you look at it and 70% of your holdings are in tech, or 60% of your holdings are in Nvidia, for example. So you do have to be cautious there. And like you said, previously, diversification is key. But yeah, I think people need to realize, look, if you're going to be in this market right now, you need to be prepared for heightened risk, and at least in the short term, and expect some bumps. And if you want to avoid some of those bumps, make sure you pull some funds out, diversify properly, protect yourself. Obviously, we're here for advice, but even if you're not speaking with us, talk to somebody about getting some of your money into something stable, like physical metal, to be able to weather these storms.
Right. Well, Chris, another thing I found very interesting about this particular article, they cite the PCE, which is the personal consumption expenditures.
Mhm.
And he brings up an excellent point with this government shutdown that we're in the midst of right now. He says we're basically flying blind because a lot of the figures that we use to measure, and he mentions like non-farm payroll reports and things of that nature, the government
Mhm.
helps facilitate or provide that information for those reports. And with the shutdown, we're not getting that. And when
Yeah.
you look at what we've been in the midst of the last couple of years with price inflation and some of these spikes, yes, some due to tariffs, some due to tax, but also some of it just due to general inflation and
Mhm.
not getting this information. And you're looking at a marketplace that is at all-time highs right now. That is scary. And I think it's a perfect
Yeah.
example. He gives it, we are quote flying blind in this situation. So
Yeah.
definitely
That's a
something to
great
be
point.
to be mindful of. Yep.
Yeah, I was going
Yeah.
to say, normally we're worried about the government giving us purposely bad intel. In this case, they're just not giving us anything to go on. So
Right.
I don't know what's
Right.
better.
Well, let me tell you this. I mean, we all, you, myself, people who are listening to this podcast right now, we all know what we're paying at the grocery store. We all know what
Yeah.
we're paying, like you just mentioned, with our electric bill, with our,
Mhm.
insurance costs, all these various things, and we know that they've gone up. And
Yeah.
so the bottom line is that I don't think it's likely that once the government starts kicking things into gear again, that we're going to find that these things are going to be
Yeah.
have that they've gone down because we know what we're paying. And so
Yeah.
that's where I think there's reason for, a little bit of caution at this point. And again, that diversification, as we talked about a moment ago. So thank you for that,
Sure.
Chris. And for those of you tuned in, if you're not subscribed to our podcast, please do so, as we'd love to keep in touch with you more in the future. And other than that, if there's any questions, you see our email address for this podcast. We get some questions. We'd love to answer those for you as well. Have a great rest of your day, great rest of your week, and we'll talk to you real soon.
Yeah. Take care.